Hey, this is Murray Bollier with Boosted Profits, and I just want to shoot this quick video because I want to get the word out to as many people as possible that we have a narrow window in time to take advantage of a tax loophole created by the 2017 tax law changes known as TCJA that can mean a difference of hundreds of thousands of dollars to business owners. So let's jump right in and let me explain what I'm talking about. So as we know, the main proposition with the tax law changes is the reduction of corporate tax rate from 35% to 21% in 2018. Okay, that's really good for income, but that means that deductions have less bang for your buck because you're not getting, 35% value of deductions is dropping to 21%. So what that means is we have a last time opportunity to leverage the deductions at the old rate, the higher rate, before they disappear for good. Uh, so I'm going to go into more detail on that. So some quick background. In order to do that, we're going to take advantage of cost segregation. Okay, so cost segregation, for some background, is a extremely powerful tax remediation strategy. Uh, you, you, all businesses base the value of their business property, including renovations, and that's an asset on the books. When they file their taxes, the asset of property uses a 39-year cost basis. What that means is if you don't use cost segregation, which most companies don't because for reasons which we'll get into, the average company will write off 1/39th of the value of the property against their income when filing taxes every year because it has a 39-year life. So that's called straight line depreciation, uh, and it's written off as a deduction to reduce your income, to reduce your taxable income and get more return back. However, cost segregation, a completely legal strategy, is a process that identifies the pieces of the property that are eligible for accelerated depreciation, like HVAC, plumbing, wiring, and so forth. What that does is by accelerating depreciation, you get a very large one-time immediate cash flow, so you can take advantage of all the taxable assets of a building one time very quickly, right the year you process this. This is a completely legal and fully supported by the IRS. It's designed to stimulate the economy. It's designed to improve the financial condition for businesses that own property. That was the intent. Um, the tax laws that were enacted in 2017 make this particular strategy a permanent option. Previously, it was year to year approved, but now it's permanent. Okay. The best industries that qualify for cost segregation are almost any industry: auto dealerships, manufacturing, commercial real estate, hotels, and construction companies have the highest bang for your buck on cost segregation just because of the nature of their business. But it's not limited to those industries. That's also medical facilities, professional services, um, restaurants, rental property owners, any building that has large uh, value of plant and equipment greater than, say, three-quarter of $1 million makes it very worthwhile to consider cost segregation. So why doesn't every business owner use cost segregation to reduce taxes if it's legal? Why isn't everyone doing it? Well, not everyone's aware of the program, and not everyone is aware that they qualify for the program. So that's why I want to get the word out to make sure you take a look at cost segregation, particularly right now. Sometimes there's no bandwidth to implement. The reason is because it requires a engineering study to be done to identify the components of property and which components can be accelerated or not. The average accountant does not have that skill. So here's an example. I'm just going to give you a fictitious example of what the numbers can be here. And the reason I wanted to do this because the numbers are substantial. Okay, so let's just assume the property for a business is valued at $4 million, which is not necessarily an extravagant building. That's a small to mid-sized company. Based on 2017 tax rates, if somebody performed a cost segregation study on the building valued at $4 million, you would get a one-time tax remediation income boost of between 240 to 300K, meaning that's a one-time cash flow income because your taxes would be reduced by that much just from doing this study on $4 million of property. So we're talking about some big numbers here. This isn't peanuts. This is significant enough that you can't overlook it. You must consider this. Okay, it depends on factors like how the building is used and the level of build out and so forth. That's why there's a range here. Um, Even if the buildings and or renovations are not new, in other words, even if the building was purchased 10 years ago, you can still do this. It doesn't have to be purchased in the year 2017. It does not have to be purchased in the year you use the cost segregation strategy, all right? And furthermore, even if a previous owner has done this strategy on a given building and a new business buys the building or a new owner, the clock can be reset, and so you can do it again. All right. The whole idea is to stimulate the economy, to provide a financial tool to help businesses, jumpstart their business, and that's why this law was created. And not everybody knows about it, and that's why I'm trying to share this information. But really, this is the best time in history to actually share this program. I mean, it's always a good idea to consider cost segregation, but right now I'm going to explain why this is the best time. All right. So because we're using a lower tax rate in 2018, the deductions that you take in 2018 will have 40% lower bang for your buck than the deductions you take in 2017 because of the rate change. I hope that makes sense. So currently businesses are preparing taxes based on 2017 activity. As of this recording, it's February 2018. So everybody is in the midst of or just completing their 2017 taxes. So in order to capitalize on this loophole, this 40% higher cash flow of leveraging the timing of these rates, the cost segregation study must be implemented into the 2017 tax computation. Waiting until 2018 will result in a lost opportunity forever. All right? And just a note on that is property renovations that are comprehended in your cost segregation study must be complete and on the books by the end of 2017. All right, so if you are in the middle of renovations and they're not complete, they weren't complete last year and they're still underway, those renovations would not be eligible. But anything that was completed at the end of the year is eligible. Age is not a factor, as we've mentioned, and the clock can be reset, as we mentioned already, when a new owner is involved. In the previous example, now just to show you how big this timing element is, I should have made this bigger here. In the previous example where we saved, 6 figures, the difference in doing a cost segregation study in 2017 versus 2018 would be a difference of around 100K in cash flow. That is why you must consider doing it in 2017, because like I say, this is a lost opportunity if you wait. All right. So in conclusion, every U.S. business should not file 2017 taxes without at least considering the impact of cost segregation, because once the window is passed, the opportunity will be gone. I can't hammer that home hard enough. You probably have existing clients or friends who are unaware of this one-time tax loophole. If you share this information, of course, that's going to generate enormous goodwill to your clients or friends or business partners or anybody that's eligible for this, because they could be missing out on some in the range of 6 figures depending on the size of their building. So get the word out. Make sure the business owners and their tax professionals and share this with their tax professionals. We're not trying to make this. This is fully transparent. Make sure their tax professionals know. So that all their clients understand the critical timing here, all right? Because once this goes away, it goes away. All right, and if for some reason, if they're interested in pursuing this and they don't have anywhere to turn, we can certainly help. My company has been performing cost segregation studies and other tax remediation strategies for over 17 years. We can estimate the potential savings for cost segregation or any of the other things we do in less than 13 minutes with a few questions. And there's absolutely zero risk. This is why it should be, this should be looked at, because we only get, if they're eligible for cost segregation, we only get paid to do the cost segregation analysis and study and processing on a contingency basis, and we only get paid a small amount of the actual savings generated. So if for some reason there is no savings to be gained, or if the owner decides not to go through with it, you don't pay anything. All right, there's absolutely zero risk. This is why everyone should be looking at this. And we work hand in hand with the client's tax professional. We're not trying to hide anything. We want them included in the discussion early on. It's just so everyone understands that this is, what we're doing, and the fact that this is an IRS approved strategy, and we don't want anyone to miss out, frankly. I mean, why should you be paying more taxes than you need to? So if you're interested in talking to me and connecting with me, and let's have a quick conversation to, if you have any questions on this or how we can get started for you, here's my contact information. I look forward to hearing from you if you need help with this. But whether you use us or not, make sure anyone you know is aware of this loophole, because we wouldn't want anyone to be paying more taxes than they need to. Thanks a lot for listening. This is Murray Bullier with Boosted Profits.